OKX and NYSE owner ICE launch a joint venture co-chaired by Andrew Cuomo Intercontinental Exchange, the company that owns the New York Stock Exchange, and crypto exchange OKX said on June 22, 2026 that they will run a joint venture built to merge digital and traditional finance markets. The detail that pushed the announcement across financial and crypto timelines was the co-chair, former New York Governor Andrew Cuomo. Bloomberg first reported the appointment, citing the two companies' statement. Cuomo will co-chair the venture with Tribune Bland, ICE's senior vice president of futures exchanges. The pairing puts a politician with a long regulatory record across the table from a derivatives executive, and it gives a single venture two leaders drawn from opposite sides of the finance world. A board seat turns into an operating partnership. ICE did not arrive at this point cold. Earlier in 2026, it took an equity stake in OKX, a deal that valued the exchange at roughly $25 billion and handed ICE a seat on OKX's board of directors. The block reported the check at around $200 million. When that investment was first announced, OKX's native OKB token jumped as much as 58% within an hour, a sign of how much weight the market placed on a NYSE parent buying into a crypto exchange. The June 22nd step changes the nature of that relationship. A passive equity position becomes a working joint venture with named leadership and a stated agenda. The two firms plan to collaborate on market structure design, clearing and risk management, and data services aimed at improving institutional access to digital assets. The products the venture intends to build, the split of labor is concrete. ICE will license OKX's real-time spot cryptocurrency price data to develop U.S.-regulated crypto futures products. OKX, in turn, will offer ICE's U.S. futures markets and tokenized equities linked to the New York Stock Exchange to its own customers. OKX says that customer base exceeds 120 million accounts. That second leg is the more striking one. NYSE-listed equities, repackaged as on-chain tokens, routed to a global crypto exchange's retail and institutional users, is the kind of distribution that tokenization advocates have promised for years. It also slots into a run of similar moves. Solana crossed $1 billion in weekly tokenized equities volume earlier this month, and wallet providers have begun listing hundreds of tokenized stocks for in-app trading. The OKX deal attaches that idea to one of the most established names in traditional market infrastructure. The futures side matters for price discovery. Regulated U.S. futures built on a crypto exchange's spot data give institutions a familiar, exchange-cleared instrument while drawing reference prices from a venue that trades around the clock. Cuomo's record sits at the center of the optics. The choice of Cuomo is the part that invites the most second-guessing. He resigned as New York's governor in 2021 and has advised OKX on policy matters, including the federal investigation that the exchange pleaded guilty to. OKX settled that U.S. case in 2025 over operating an unlicensed money-transmitting business, paying penalties that ran into the hundreds of millions of dollars. Installing an advisor who helped steer the company through that episode as the public face of its Wall Street partnership is a calculated bet that political and regulatory fluency now outweighs the baggage. For ICE, the venture is a way to plant a flag in digital assets without building a crypto exchange from scratch. For OKX, a board seat and a co-branded venture with the owner of the NYSE is the strongest possible signal to U.S. regulators and institutions that it intends to operate inside the system rather than around it. The risk runs the other way too. Tying a federally penalized exchange to the NYSE brand invites scrutiny if anything goes wrong. Wall Street and crypto keep closing the gap. OKX and ICE are not alone in stitching the two worlds together. Crypto exchanges have spent the past year courting regulated infrastructure from multiple angles. Kraken has pushed for a Federal Reserve master account to gain direct payment access, and Coinbase has built out custody and derivatives lines aimed squarely at institutions. ICE itself spent months laying groundwork with OKX, including bringing never-expiring oil futures to crypto users earlier in 2026. The market backdrop is cautious rather than euphoric. As of June 22, 2026, Bitcoin traded near $64,697, up about 1% on the day, and Ether sat around 1,765, up 2.5%, with the crypto fear and greed index reading 23 in fear territory. The convergence story is moving forward on structural deals, not on a price rally. This is also a U.S. market structure event first. The NYSE, a former New York governor, and U.S. regulated futures all anchor it firmly in the United States regulatory arena, even as OKX's distribution reach is global.